The SEC in the last 48 hours has gone over after both Binance and Coinbase, but there may be an agenda here to push them towards JP Morgan. There is a lot going on today. I just want to jump straight into it. We'll catch up on Coinbase, Binance before we jump into JP Morgan and what we missed yesterday, because the CFTC put out a huge approval that slipped under the radar with all this noise that's going on. So really quickly, a 1-2 punch finally registers the SEC view on Binance, Coinbase, the rest of crypto. The US SEC tore off crypto's bandage this week. They sure did. But we've seen that it's a bit of a nothing burger. We'll jump into the chart shortly with its back-to-back enforcement actions against two of the most prominent digital asset platforms. Binance and Coinbase finally establishing its legal argument against industry and setting up the future courts fights that could decide everything. We'll get into it. Let me finish this first. Virtually every business activity conducted by the crypto platforms needs to be registered with the agency and must follow security regulation under the watchdog's oversight. The agency contends in these actions in months of previous enforcement and speeches, and virtually every crypto asset they handle should also be registered as securities. I think the sheriff is in town and making their presence known. The SEC accused both Binance and Coinbase of operating unregistered exchanges and offering the sale of unregistered securities, including Binance's own digital assets, BNB and BUSD, the stablecoin. So one-stop shops, the regulator went after the companies for operating simultaneously as exchanges, brokers, dealers and clearing agencies without registering in any of those categories in the US. And that line there is pretty important. And this is why people like JP Morgan, companies like JP Morgan may win this crypto battle, and that may be the agenda here. We will get into that. That's been a constant complaint of SEC Chair Gary Gensler that crypto firms offer one-stop services. The SEC's reliance on an enforcement-only approach in the absence of clear rules for the digital asset industry is hurting America's economic competitiveness and companies like Coinbase that have a demonstrated commitment to compliance. So a lot going on there. Coinbase traders yesterday withdrew $600 million in a day amid the SEC lawsuit. Net outflows over 24-hour period totaled $600 million. Traders have withdrawn $1.38 billion in crypto during this period, compared to $771 million in deposits. The data, it does exclude Bitcoin transfers there. The magnitude of the outflow aligns with prior stressful events in the crypto industry, including the crypto banking crisis in March and the collapse of SBS FTX exchange late last year. So Gary Gensler's words here, this is a little bit of a punch in the gut, but we'll jump into the charts and then why this is probably good for crypto long-term going forward. Short-term pain, I understand that. US doesn't need more digital currency because it has the dollar, says SEC's Gensler. The US doesn't need any more digital currency, said the SEC Commission Chief Gary Gensler, as his agency sues Binance and Coinbase for operating unregistered security exchanges. We don't need more digital currency. We already have digital currency. It's called the US dollar, Gensler said. We have not seen over the centuries that economies and the public need more than one way to move value. In a way, Gensler is right. We don't need more than one way. We just need one way that's a hard asset, and that's Bitcoin, definitely not the US dollar. If Bitcoin wasn't around, then it would be gold. It's definitely not the US dollar with the fiat system here. Gensler will seek to prove that the thousands of tokens tradable on two of the biggest crypto venues resemble investment contracts that should have been registered with this agency rather than means of payment. All we have to show is that one of them is a security and they should be properly registered, he said. If they can do it to one, then they can do it to all. We do know, and I'm going to jump into a tweet by Simon Dixon that he retweeted yesterday, but we do know they're cool with Bitcoin, maybe Ethereum, not everything else at this stage. And the US is going to lose this fight because we will jump into Hong Kong and what the rest of the world's doing. Gensler noted that the crypto industry needed to improve its compliance and disclosure if it's going to have any success going forward. That line there as well is why I also think he's going to start pushing it into these big institutions like JP Morgan. On the news of Coinbase, we can see we're up to 1.17 trillion, up 3.4% the last 24 hours. A lot of green on the chart, very different to yesterday if you're tuned in. What goes down must come up. It is still going to be a little bit volatile for the next week and a half, especially with that FOMC meeting coming up. So be prepared for that. 26,999, nearly back at 27. We did get above it and we have come back down a little bit. Last 24 hours up and to the right. Ethereum, very similar story, 1885, 4.4% last 24 hours. Nice, clean on the charts. When we're getting bad news and the markets start rallying on that, that's the sign that we're at the start of a bull market, not a bear market. If we were in a bear market, bad news, price would go down. This does symbolize that long term, this is very close to the floor, or we've found the floor as well. Band of bubbles here. The funniest thing yesterday, Hex was the only one up, and it's one of the very few that are down as well. It does say BUSD is down. It's a stable coin, so not really. It is holding very close to peg there. Pepe, big winner there. So if you got in yesterday, if you bought the dip, it's been a great day for you as well. So Simon Dixon put out this tweet yesterday, retweeting it, then he retweeted it, which was nice and fun going back and forth. I've got a message there. Hopefully that is from Simon. So keep you up to date on that one. We will get him on the show, ladies and gentlemen. I promise you that. Hit subscribe. Just really quickly, I will have Natalie Brunel on next week as well for a live interview. An amazing person in the space. So make sure you hit that subscribe button. It's going to be a fascinating conversation. Somebody I really respect. We'll go really in depth with that. Now, this tweet, this thread, it's absolutely massive. I have put in the description below for you. He breaks it down very, very clear-headed. And this is just an opinion, a prediction, a forecast. Don't take it as fact. But it's probably pretty close to spot on. And this is how he sums it all up. It's a huge thread, but you have to read it. Ladies and gentlemen, if you do one thing today, read this tweet. So my forecast, one, multi-billion-dollar SEC settlement for Binance that will operate outside US, pivoting to a public audible company, significantly smaller but compliant. CZ hands over like Arthur Hayes and moves on. Two, clarity for the industry in the US moving forward, probably with 2 years of uncertainty. May even come a little bit quicker than that. I was thinking sort of 12 to 18 months, 2 years, very reasonable though as well. Simon would know a lot more than me. Three, Bitcoin is a commodity, ETH is a commodity, everything else is security, special stablecoin regulations eventually. 100%. I agree with that statement 100%. And with the stablecoin regulation, either stablecoin regulation or they just bring out their CBDC and that's a requirement, they bar everything else. Four, US losing its lead in the sector while it tries to figure out how to support it responsibly. Five, Bitcoin fixes this. Don't store funds in exchange, don't overtrade. That has been imperative to my success. Not your keys, not your coins, get them off the exchange. For me, and you need to do you, not financial advice. Hold mostly in Bitcoin, use everything else to accumulate more Bitcoin. That's the aim of the game here, ladies and gentlemen. At this stage, everything else is noise. I understand the technology is there. It's revolutionary, but it's also inflationary. A lot of it, and the rules change so often, even with Ethereum proof of work to proof of stake, the mechanisms behind it, the issuance, are they registered, are they not, are they securities, are they not? Safe with Bitcoin, use everything else to go into Bitcoin hard assets. And we'll do a full video breakdown on why Bitcoin is not crypto. Bitcoin's Bitcoin. And then there's crypto, and we use crypto to get more Bitcoin. That's my thoughts, ladies and gentlemen. Yes, I'm a maxi. Bitcoin will survive whatever comes to Binance. I'll buy the dip with gratitude. Nobody said separate money and state would be easy. SEC charges, complaint summary. And now, this is what everyone missed yesterday. And shout out to Gabor. While everyone is caught up in the Binance SEC case, institutions entered the chat. And this is great. And maybe that's why Binance and Coinbase have been sued, to allow a smooth path forward for institutional companies to be able to come in without people noticing. So the CFTC approves Kobe Clear Digital LLC to clear margin digital asset futures. I've put this thread in the description below. You can go through that cftc.gov report there. Gabor said this as well. I worked with the OCC back in the days to get a margin model approved. The CFTC was waiting to see how the CME contracts ended up functioning. Obviously, they're working well, so it looks like approvals are back on the table. Dr. Chris Dark, I noticed this was getting little attention too. Hey ho. This is a big move forward for the space, and we do need regulation. We don't need regulation, but we need regulation for investment money to be able to come in, large size money to come in. And this is moving forward pretty rapidly behind the scenes, but they're showing what this hand's doing while this hand is doing something else. Real quick article here. Swift and Chainlink will test connecting over a dozen financial institutions to blockchain networks. So in a new set of experiments, Swift will collaborate with major financial market institutions like the Depository Trust and Clearing Operation, Australia and New Zealand Banking Group Limited, ANZ, BNP, BNY Mellon, Citi, Clearstream, Euroclear, and Lloyds Banking Group. Now, with this, Chainlink, they provide real-world data to blockchains. Will be collaborating with dozens of financial institutions to test how they can connect with multiple blockchain networks. And a new set of experiments, Swift will partner with all these guys. The goal is to test how these institutions can use Swift's infrastructure, which is so outdated, so slow, but we'll see. It's just a messaging service at the end of the day. Electronic, so maybe they can work this out to instruct the transfer of tokenized assets across blockchains, the press release said. Capital markets, there is a growing view that blockchain technology could generate efficiencies, reduce costs, and a simplified settlement process could attract more investors into the private markets as well as increase liquidity. Swift's getting in, biggest payment rail in the world moving forward. Obviously, Swift works closely with governments around the world as well. So if they're moving forward with this, there's an agenda behind it, pushing them in that direction, and that's great. But listen to this. Banks hold the largest amount of capital global, and if our industry is going to grow past the single-digit trillions, then the banks have to come in, and in reality, I think it'll be the banks and their clients that grow the blockchain industry past 10 trillion. Bitcoin is going to get most of that, and then it's going to trickle down ETH as well, and then we go out in the risk curve. Currently, the overall crypto market cap stands at 1.08. We saw us today 1.17 trillion as well. So they're moving forward. Banks are entering, and they're just working out compliance-wise, but banks work very closely with the regulators. So when push comes to shove, no wonder they're probably going to win this fight at the end of the day. Especially in America. Around the world, Hong Kong, the UAE, it is looking more favorable. Australia is not too bad for crypto as well, apart from the tax. It's insane when you need to pay a hell of a lot of money. They hit you pretty hard. We've gone over Coinbase. I have linked that article. I'll leave that for you. Now, this came out 2 days ago with JP Morgan pro Bitcoin and Jamie Dimon. He is, he isn't, he is, he isn't. We'll just touch a few things here. Bitcoin retail demand to remain strong ahead of the halving event at JP Morgan. The event will double the Bitcoin production cost to around $40,000, creating a positive psychological effect. The report said, obviously with the Bitcoin halving, when miners' rewards are cut by 50%, would mechanically double Bitcoin production cost to around 40K, creating a positive psychological effect. As that goes on, in contrast, institutional demand for Bitcoin has been falling. They are saying retailers still hopping in, and we've seen that in the last 24 hours. But institutional demand has been falling, with investors discouraged by fraud, heightened volatility, and a year-to-date US regulatory assault. This came out before the latest assault started. And the reason why I think JP Morgan is putting out this piece is start to see people. So people start seeing JP Morgan as a trusted thought leader within cryptocurrency, and they'll just slowly work at it, and then they'll implement it, bring it out, and then customers will be able to buy Bitcoin, Ethereum. either through the bank without them being able to trade it, but they'll be able to hold it in cold storage themselves or through their bank accounts there. SEC sues Coinbase as unregistered securities exchange allegation. A little bit more information in this one. What I want to point out is and we touched on this yesterday, so make sure you hit subscribe to stay up to date. But the SEC identified tokens issued by foundations and companies with tighter protocols. So this is what they're deeming as security. These are not securities at the moment, but they are putting it out there that they want to go after these particular cryptocurrencies. And as we said earlier with one of the quotes from Gary Gensler, if they can make one a security, they can make them all a security. So we need to be careful. You and I, there's not much we can do. It's just going to play out. For me, stack sats and chill. Buy the dip, hopefully is load up the truck yesterday. Still going to be volatile. So DCA all the way is probably the easiest, most successful path forward for most people, or a little bit of long-term swing trading. So Solana, Cardano, Polygon, Sandbox, Filecoin, Axie Infinity, Chili's Flow, Internet Computer, ICP. I love it. Near, Voyager, Dash, and Nexo as securities in the suit there. Unlike its Binance lawsuit, the SEC did not allege that Coinbase commingled customer or allowed company executives to transfer such funds to other entities. So that's interesting, but just keep that in mind. If they can get one of them, it is going to be pretty harsh, especially in the US for the crypto market. It takes a long time for them to be able to do anything. We've seen that since FTX to now to be able to come out, but then it happens slowly, then suddenly. We do have good people in our camp, and then Hong Kong's sort of taking the opposite approach to what the US is, as well as the MiCA laws in Europe, the UAE. There's some great places, and it is going to push the industry out of the States unless these big institutional players come in. And I think that's probably more likely at the end of the day. But like Simon was saying, the next 2 years, a little bit of uncertainty in the space. That's why I believe in Bitcoin fundamentally. The rest, I use the fundamentals to be able to get the fundamentals, yeah? So Hong Kong's regulatory lead sets it up to be a major crypto hub. We've talked about Hong Kong in depth many times. A couple of things I wanted to say here. The exchange said, in comparison to other regulators, the FSC has a stricter requirement for virtual asset service providers. It has compulsory insurance compensation arrangement requirements in place to help protect clients. Further, it has a 98% cold wallet storage requirement that licensed corporations would need to comply with. We believe only the best virtual asset service providers will be able to comply with the financial and operational requirements. Pretty big statement there, a lot going on with that, but that's the right type of regulation. The rules are very clear. The companies can come in and they know what to do, how to operate, and then they can provide a service to you, ladies and gentlemen. Nobody in crypto wants regulation, but if they can get regulation right, it allows the everyday citizen to be able to come in with peace of mind. They are talking about insurance compensation arrangements as well. In Australia, on the centralized exchange that I use for part of my super, it's insured up to 250,000. Now, 250,000 is not a lot of money, especially when you're talking about retirement accounts, savings accounts. With that, but when it's super, you need to have these things in place, or insurance, so you can break it up over a couple of exchanges. But when they have things like that, it allows more money to be able to come into the space in a sustainable way. So I think that's what we need to see, unfortunately. This is pretty much a PSA. As I say, not your keys, not your coins. It's a big saying in crypto. It's not my saying, but crypto risk management, how to get your wealth off an exchange. We won't go into what device to use, how to do it. I just want to sum it up for anyone that may be a little bit new to crypto. A couple of reasons why you want to come off the exchange is you want to be self-sovereign, especially with Bitcoin, Ethereum, your larger assets. You want to be able to go anywhere around the world, do whatever you want. It's your insurance for the future, schmuck. insurance, as Chamath Palihapitiya would say. So a couple of reasons why you want to get it off the exchange. They could suddenly halt selling and withdrawals, and exchange becomes insolvent, like FTX and FTT. FTT, obviously, that's what you get when you're buying ship coins. So the exchange undergoes an outage, cutting your access to its platform, your cryptocurrency. We saw that a lot last year. 2021 in the bull run, a lot of people not being able to get out of their longs or shorts and being liquidated. Crypto exchange gets hacked. One of the things with it getting hacked, if it's like in Australia and you've only got less than 250,000, if it gets hacked, well, it's insured like the FDIC insurance that you have over in America. But it just depends where you are in the world, what the regulation is. So make sure you check. I still wouldn't leave too much on the exchange. It is a big journey to take a lot of responsibility to go cold storage, break it up, separate the 24 words onto 3 different bits of card. So you need to split them up around the world. When you go to those links, there's a lot in depth, but then you've got a bearer asset. You physically hold it as much as you can hold a digital asset. Yeah. So why cold storage is the safest option for you. Definitely a big learning curve, definitely the safest way. There's a famous saying in crypto, not your keys, not your coins, which basically means if you're entrusting another entity, such as an exchange, to hold the private keys to your crypto, it is the one who controls your crypto, not you. So to keep things simple, you want to have custody of control over your crypto and to not give that power to an exchange or other third party. To do so, you need a crypto wallet that gives you custody. There are 2 main kind of wallets, hot wallets and cold wallets. Hot wallet is on the internet, basically, and it's vulnerable to hacks such as Solana's one, KuCoin. They're always getting it. Atomic Wallet the other day, which we covered as well. Obviously, the news with the fast facts, always keeping you up to date. Hit subscribe if we vibe. But a cold wallet is the safest way to protect your wealth regarding cryptocurrency because it keeps your tokens offline. It doesn't keep your tokens offline. It keeps your seed phrase to be able to access that, your keys to be able to access those tokens. The tokens are just in cyberspace. Yeah, you just need to sign that transaction with whatever cold wallet device it is. That proves that you own those tokens, but you're not actually taking your tokens offline. But if that allows you to imagine you've got control, like gold in your pocket or something like that, that works. But in reality, that's not the way it works. So it can get a little bit complicated. I've put this link below for anyone new in crypto, but you really need to dive into it. Spend 5-10 hours looking into it before you pull the gun. But once you spend those 5 or 10 hours, you're done. You know it for the rest of your crypto journey, for the rest of your life, and then you can show friends and family. So a cold storage wallet has no connection to the internet, which dramatically decreases the ability of hackers and cyber criminals to access your assets, keeping them safe and secure. So I've put that article there, ladies and gentlemen, for you. It's a big one, goes into it as well. A lot of FUD going out. We've talked about it with Ledger. I still use a couple of Ledgers. There's Trezor on the market. Cold Card's probably the next one that I want to dive into. Cold storage devices are a huge learning journey. You need to take it nice and slow and try a little bit when you move funds over. Don't just put it all over, because if you send it to the wrong address, you get it wrong, you lose your keys, and you send it all into one place, it's gone forever. You can't call up the bank. There's no insurance when you become self-sovereign. 100% responsibility. Have a very, very beautiful day. We'll see you on the next one. Be blessed. Peace.